Alright, good morning. Let's go over today's trade plan. So in the overnight session, we saw that buyers held ES above that 31 support area and pushed it up towards the 38 resistance, where we got a little bit of selling. Now at this point, the short-term directional bias is in alignment with the bigger picture uptrend. So our focus is going to be primarily on the long side. I think the challenging part of trading today is going to be that ES is already opening at a relatively high price, and our upside target was 41 to 42, right? That gap and naked VPOC. So that makes it a bit tough to buy the market at a very elevated price, while still, managing risk effectively and having a decent reward to risk on the trade setup. So the main idea and the main scenario we're looking for is ideally that we get a pullback, that we get a chance to get on board, and then we can target 41 to 43. But right now, the way this thing is set up, it may just head up there right off the open, and 41 to 43 is not a spot where I'm expecting a failure or, we're looking for a short setup. It's a profit target. Um, Given the momentum, this could quite easily go up towards the all-time high and, perhaps fail or reject at the all-time high or near the all-time high, and then, kind of pull back and start bouncing in a range. But, we've had two pretty volatile wide range days, and I think, the market is due for somewhat of a normal day, kind of a typical day, where, the range is 12 to 15 points. Um, we do get more of a balanced type session. It's not just continued trend up. Monday was essentially a trend day with no econ reports. Today, again, we don't have any econ reports. Volume is looking all right so far, but more in line with the average. So today, we could pull back to 31.33. We could even pull back to 28.75, and that would not affect the bullish bias. Our bull bear zone is 23 quarter to 26 quarter. So as long as we hold above that area, buyers can maintain control. And even if we break that area, it doesn't necessarily mean that we start aggressively shorting the market. And the reason is that by that point, you may be exhausting the range, right? So there may not be a lot more in it. Right now with everything the way it's set up, bigger picture being bullish, short term now supporting the upside, I think the main opportunities are going to be on the long side. It's just going to be a matter of, does the market give us good enough trade location and reward to risk to justify entering long? To enter long, we need to have at least a 5 to 7 point target on this trade, right? If we're using a 2.5 point stop, we need to look for at least 5 to 7 points, and that's really going to be the challenging part is, where can we enter where we can get, 6, 7 points out of the trade while still using a relatively tight and logical stop, right? Like we're not using 2 point stops or 3 point stops, just arbitrarily, right? There has to be logic behind where you're putting your stop, right? It has to invalidate some sort of idea. It doesn't mean it has to invalidate the whole, trade plan or the bigger picture, but at least even short term, it has to break below a certain range or break below support zone. So the stop has to be at a logical spot and still be within that 2 to 3 point parameter, so we can get decent reward to risk on the trade, and that's really going to be the main challenge today. So that might mean no trades, right? That might mean that you have to kind of sit this one out if you're not getting good reward to risk. And as a professional trader, it's not about making money on every trade or every single day. You have to view it as kind of a portfolio where you're measuring yourself on a longer time frame. So that's really the main idea, main focus long side. Let's see if we can get some sort of pullbacks that offer us decent location, good reward risk, and we'll execute in that direction.